Well guys, welcome into today's video. Hope you're all having a great day out there as always. So every once in a while on this channel, we do what's called a big stock market valuation video. This is that video, okay, where we're gonna look very in depth at forward P's, current P's, price to sales ratios, PEG ratios, all these different metrics in the stock market and break them into specific categories around growth stocks, value stocks, mid caps, large caps, small caps. Super in-depth video. That's what we're going to go into today. I'm going to show you all this data. Then I'm going to give you my opinion on this. And I'm going to give you 3 big points on my personal opinion on what to kind of do in the stock market right now, the way I'm looking at it, how much cash you should be holding, how much you should be investing, things like that. Okay, we'll get all into this. Now, why is this so important to look at the valuations of the market every once in a while? Something I like to look at pretty much every month, if not every other month, okay? Why is this? Well, you want to know if it's a time period where you should likely be buying heavy, as far as like flooding money into the stock market, like buying everything in sight. There are certain times in the stock market where it makes sense to do that, okay? There's a time period where you got to be buying light, okay, where you're not going too heavy into stocks or things like that, but you are still buying, okay? There's certain time periods when you're not really buying. All you're doing is holding your positions. And there's other time periods in the stock market where it makes sense to either sell specific stocks or sell all your stocks. Now, I've never, I've been in the stock market for 12 years. I've never been through a time period where it makes sense to sell all your stocks off. But every once in a while, it definitely makes sense to sell some of these positions because they just quite frankly get overvalued and you kind of run from the hills from some of those stocks, okay? And you guys know I always talk about 10 to 30% cash, right? I always talk about having 10 to 30% of your net worth essentially in cash. It doesn't mean actual physical cash. It could be money in savings accounts, checking accounts. It could mean actual cash, things like that. But money that's ready to deploy. It could be money in brokerage accounts. And you get down that 10% number if you're investing super heavy. And there's deals everywhere and you're just buying, right? And sometimes I've gotten down there before. I have. I mean, I remember specifically back in kind of like November, December of 2018, I got all the way down to like 10% cash because I was buying just like everything sight essentially, okay? And there's other time periods where there aren't very good deals and you can get all the way up to 30% cash. And I've definitely been there, a few different times in the past as well, okay? And so it's very important whether you're buying everything in sight or you're just kind of like, I'm not too interested in buying at the moment. So hope you guys enjoyed today's video as always. If you don't mind, smash that thumbs up button. It helps out the YouTube channel massively. Lets me know you guys enjoy a video like this where we go in depth on a big subject like this around stock market valuations, where all these different things are at. Also, if you're looking to join my private group or try to join Financial Fortress, my private group and things like that, you definitely should do it either this week or next week. And the reason being essentially is they're running a special for this Black Friday week and Cyber Monday next week essentially, where it's like anybody that signs up for like a 2-year membership, you get a free month of coaching from one of our 6-figure or 7-figure coaches. So it's like crazy value for the next 2 weeks. So if you're looking to try to join my private group, you have to apply, you have to get accepted, you have to get on a phone call, things like that, and make sure you're kind of a good fit for the private group and things like that. And then you can move from there. And like I said, that's a pretty awesome deal that they're doing for the next couple weeks because that's a tremendous amount of value. Like to get one-on-one coached by somebody that's got, mid 6 figures, high 6 figures in the stock markets, had a ton of success or 7 figures plus, like that's pretty special. So that's going to be linked in the description. Also have that as one of the pinned comments down there. Alrighty guys, let's start getting into this. So what I want to start with here is I want to look at some research done by Yardini, okay? Yardini, I always like these folks for they just put a lot of really good charts that are super helpful to us trying to judge like what stock categories are worth looking into, what look like pretty overvalued right now, and things like that, okay? So we're obviously looking at the market here today. Everything's up, but you can't just look at the market and be like, well, Dow's at 29,000, it's overvalued or undervalued. You can't just look at the S&P 500 and be like, S&P 500 is at 3,500, it's overvalued, it's undervalued. No, that's not the way this works, okay? Because if all you're looking at is where the chart is for like where that price action is, you're not going to be able to decipher any information. I mean, because look at this. I mean, you go back to February, the market's about where it is back in February. So if you look at just that, it looks like, oh my gosh, the stock market, it must be undervalued because it hasn't gone anywhere since February, right? But then you go ahead and you look at where the market's gone in the past 7 months or so, and you're like, okay, yeah, the market looks like it's a dang ripoff right now, right? Because the Dow's gone from like 18,000 to 29,000 or whatever, right? That's a massive, massive difference there. So really, if you're just looking at the pure charts, you can't decipher anything. Look at the NASDAQ. NASDAQ here today is at 11,800. And it looks like, oh my gosh, the NASDAQ must be massively overvalued. But the fact is, there are a few select stocks that really control like almost half of the NASDAQ, okay? Apple, Amazon, Google, the FB, Microsoft, and Tesla, because it's gotten so big now, those ones have a dominance of control on whether the NASDAQ goes up and down on a given day. Guess what? All 6 of those companies doing amazing, okay? Absolutely amazing. So they make the NASDAQ look a whole lot better than it really is, and that's something very, very key to pay attention to here, guys, okay? All right, guys, so let's start going through some of these charts that Yardini has for us here, okay? So the first one here I want to look at, this looks at S&P 500 large caps, okay? And we're looking at forward PE ratio. So essentially the next 4 quarters versus where the stock price is. This is a very important. You guys always know I talk about forward PE. I love the forward PE metric more than any other metric in the stock market by far and away, okay? And so if we look at this, it looks really high, okay? When it comes to S&P 500 large caps and their forward PEs. It does look very high, there's no doubt about it. But keep in mind, this is kind of a trick a little bit, because remember, 2021 it's not like all these companies are going to be back to normal, right? That's just not the way this works, okay? So it's tricking us a little bit in making it look a lot more expensive than it is. 2022, a lot of these companies' earnings are going to come back in a major, major way, and a lot of these companies are probably going to get back to somewhat where they were before. That's probably not happening in 2021, right? Some companies will get back there, but most of them will get really back and back in a major way in 2022, because remember, in the first couple, let's say, quarters of 2021, we're still going to have Roni fears. We're still going to have some lockdown situations. It's the way it's going to be. The second half of the year, things could start to heat up a little bit, and then moving into 2022, okay? So 2021 is a little bit of a trick, but if you're just looking at it from a pure standpoint of, is it high? It looks high right now, okay? I just think it's tricking us a little bit, okay? S&P 400 mid caps, we're getting a little different story. S&P 400 mid caps, as far as their forward Ps, 19.2. This is much more interesting. This isn't bad at all, I would say, okay? It's certainly not like, oh my gosh, things are so cheap right now, but that's not bad. Because remember, this is looking at the next 4 quarters versus the stock price. And remember, the next 4 quarters, a lot of these companies, is not going to be like so amazing. So if you're looking for the mid caps, much more interesting. I mean, much, much, much more interesting than large caps. Not bad at all, okay? Small caps, same exact situation. S&P 600 small caps are at 19.3. So when you're looking at this, you know, it's not like it's cheap once again, but at the same time, it's not like, oh my gosh, those are so overvalued, mid caps and small caps, okay? So far, like, what can we like decipher from this information? The big companies for the most part look overvalued right now. Mids and smalls are at very fair valuations, okay? So this means essentially a lot of those companies that have between a $1 billion market cap and a $10 billion market cap, they look pretty darn attractive. Maybe even up to like a $25 billion market cap. But when you start getting to a lot of these companies that are 50 billion, 100 billion plus, a lot of them, to be quite frank, look very overvalued as of right now, okay? Now that's just one part of things, okay? I wanna go ahead and look at the Russell 2000. Now we're going a lot more broad here, okay? When you look at the Russell 2000 growth, okay? Forward P ratios for the growth side of the Russell 2000, they're ridiculous, okay? There's no other way of putting it. I mean, they have to cap it at a 60, okay? I mean, that number is capped at a 60, all right? So essentially, what you're looking at in this chart here is just the fact that growth stocks in the Russell 2000 are trading at silly, ridiculous valuations. No doubt about it, no other way of putting it. But then if we go ahead and we look at the Russell 2000 just in general, it also looks high, okay? Now, there's a big difference between the Russell 2000 in general and just a growth category, so it looks more toward fair, but it still looks very, very high. And I think a lot of that is basically because of the Russell 2000 growth category is just so insanely overvalued right now that it's making the entire Russell 2000 look like it's much, much richer. And keep in mind, in the Russell 2000, you got a lot of smaller companies, a lot of smaller businesses businesses have been hurt worse than the big companies when it comes to Rona, okay? Now, a lot of the smaller businesses will likely come back even stronger in the back half of 2021 and 2022 when it comes to earnings growth. They'll likely way exceed what a lot of these other companies, these bigger dogs, are basically going to be putting up, for the back half of next year, and especially moving into 2022 in terms of earnings growth, okay? So yeah, definitely high there. Now, value is where things get interesting. Look at Russell 2000 value. 19.6, okay? This is where real opportunity is in the market and in the Russell 2000 right now. The value stocks, okay? Now, the value stocks aren't the stocks that always attract people, right? Everybody wants the next Tesla, or they want Tesla, right? Or they want Apple, or they want Microsoft, or they want Amazon, or they want the next Shopify, or they want Shopify, right? Or they want Zoom. That's what a lot of people want, okay? But the fact is, sometimes there's certain time periods in the market where the value stocks, the non-sexy stocks, are really the deal, okay? And this is why it's so important to be a good investor when it comes to growth stocks, value stocks, dividend stocks across the board, because sometimes growth stocks are a ripoff and you got to go to those value stocks. Sometimes value stocks are kind of a ripoff and growth stocks are trading really cheap because everybody's scared. And so you kind of got to know where the opportunities are and how to find these stocks. But value, man, value is actually looking pretty darn attractive right now in the Russell 2000. So what we can kind of decipher from more of this, if you're looking at growth versus value, growth, very expensive, just flat out. And when we say very expensive, we mean off the charts expensive when it comes to these growth companies, okay? It's just, it doesn't mean every single growth stock in the world is super overvalued, but many of them are right now, okay? However, value stocks, very fair. They're not cheap, but they're fair, and there's a big difference. And that means when you can buy stocks when they're fair, okay? There's nothing wrong with that. But man, growth is a little scary right now, okay? Look at this here. This is forward PE ratios for US small caps, okay? And so if we're looking at Russell 2000, once again, we're at 32.4, very high. But when we look at S&P 600 small caps, we're at 18.8. And remember, a lot of these companies are going to come back way stronger. I mean, way stronger in terms of their earning growth in future years than essentially a lot of the big guys are, okay? A lot of the big guys have seen some of their earnings dip, but a lot of them have already seen their earnings come back. A lot of these smaller companies, they're going to see things come back in the back half of this year and moving into next year. So this is another thing that's pointing to small caps, guys. Small caps values, okay? Small caps values. This is where we're getting some real attractive valuations, all right? Now, these next two charts I'm going to show you here, they're looking at P's, and I'm talking about trailing P's, which isn't the thing I like to look at the most, but we got to still look at it. Trailing P's, and we're also going to look at the next chart is going to be price to earnings growth after this one, okay? When it comes to S&P 500, okay? Now, when we look at this, just at the P's, okay, the S&P 500, obviously it looks scary, right? 21.7. We're valued, the highest since literally the tech bubble, right? Back in the late 90s into 2000, right? That's just downright scary. But keep in mind, earnings have been devastated for a ton of companies in the S&P 500. They just fell off a cliff, okay? That's not going to stay that way, okay? In the back half of 2021 and moving into 2022, a lot of these companies' earnings are going to come back very strong. But as of right now, it makes it look like the S&P 500 is so insanely overvalued, it's ridiculous. But, it's honestly just at the end of the day, it's just because a once-in-a-100-year event came out of nowhere and smacked a ton of these companies like never before, okay? Where we're looking at price to earnings growth, this is pretty interesting. So price to earnings growth is at a 1.9 right now, okay? It's still very high. What you're having to pay for growth is still very high. That's kind of what you should think about when you're looking at a PEG ratio. What you're paying for growth, okay? And so we're high, but we're coming down. So, like I said, we're high, but we're coming down. So it's kind of like, you got one good side and you got one bad side. The bad side is things are still high. The good side is the numbers are coming down and coming down in terms of what you're having to pay for earnings growth, okay? So that's PEG ratio, right? Now, also, if we look at this here, this is looking at forward PE ratios for the S&P 500 index in general. And if we look at the S&P 500 in general, we're looking at numbers that are like a 21.9, right? which is high, no doubt about it. It's the highest in recent times, right? But once again, we're kind of getting this trick situation where, yeah, a lot of these companies' earnings aren't going to be that great for the next couple quarters, okay? But as a vaccine gets out there, as the economy starts to get more normalized, as business starts to be able to open back up, as a lot of these cities and their restrictions start to open back up in kind of like the middle of 2021 and moving in the back half, you're obviously going to have money velocity start to pick up, corporate earnings start to pick up, hiring start to pick up, and things get back on the right track, right? So that's why we're kind of getting tricked again here. Now, S&P 500 technology, remember, a lot of these tech plays haven't been hurt. A lot of them have actually benefited from Rona, right? And if we're looking at those as 26.2, high, okay? It's very, very high. Good news, the only good news is the numbers are coming down, so that's fair, but the numbers are still high. Just no doubt about it, okay? Now this next chart I'm about to show you, this might be the most telling chart of any of these I'm gonna show you, okay? And then after this, we're gonna start getting into kind of, my 2 cents on this and some of my advice with this, okay? But this might be the most telling chart, okay? Wow, look at this, okay? We're looking at growth versus value now. We're looking at forward P ratios for the S&P 500, growth versus value. Growth is off the charts, okay? 27.3. That's an ouch. But value stocks, as far as forward P ratios in the S&P 500, they're very okay. You know what I mean? There's no way you can say that's massively overvalued. You also can't say it's massively undervalued, but it's very fair to say that value stocks are the play right now. It really is. Growth, my goodness, you're paying through the nose. If you want anything with major growth in this market right now, pretty much for the most part, you're paying through the nose for it, okay? But the value, all of a sudden you look at that and you're like, okay, I can deal with that, okay? Now, if I go on my stock tracker app here, okay? I have a ton of different categories here of like list of stocks that I keep track of and things like that, including like my stocks, which is kind of looking at all my different stocks. I have like a random list. I have a stocks I might buy soon kind of list. And then I have this one specific one here called no valuation care, and it has 6 stocks in it. Now, there's a lot of stocks in the stock market I could put in there, but it's kind of 6 core stocks that I feel almost everybody in the stock market knows about these stocks. And a lot of times these stocks just don't trade like valuation matters, okay? It's just people want in these stocks because usually they have big stuff they're going after and the opportunity is just massive for the companies long term, and so people don't care about short-term metrics. They don't care about valuation. They say they're buying these, okay? These 6 stocks are Tesla, Maestra, Snowflake, Amazon, Chipotle, Shopify, Zoom, okay? Like I said, I could add definitely a lot more stocks, but that's enough, okay? And so if I'm looking at that list today, it's interesting because the market's all green. It's not like a great day in the market, but it's pretty good, right? And 3 stocks are up, 3 stocks are down. And Amazon's like right around break even, so that could even finish red today. We'll see what happens, okay? But it's not like all those stocks that are in the no valuation care are doing amazing, right? Tesla's really the main one that's doing amazing right now. That has starting to get a ton of hype around it again, not just because of Tesla's business model and what the numbers are they're going to put up over the next few years, but obviously the S&P 500 inclusion that's happening in a few weeks from now. And so that's getting like everybody super hyped about that stock. A lot of trader money's getting in that stock again. So that one's just, that one's kind of an exception of the rule, okay? My 2 cents with all this, okay? I'm gonna give you 3 things here, okay? Number 1 of 3, be very careful of growth stocks right now. If you're thinking about putting your money in growth stocks, look again, and look again, okay? Make sure you are, you should always be doing max amount of research when you're looking at any of these stocks. But my goodness, right now it is, unbelievably important to make sure you are like diving in before you ever put money in any type of major growth stock right now. Because I'm telling you, a lot of these growth stocks in the market are rip-offs, to be quite frank, okay? Just like, there's no other way of putting it, okay? So before you buy any of those guys, man, you better be looking, because some of those growth stocks, they're gonna come down, they're gonna come down fast, and you can be down 30, 40, 50% on some of those in a very quick amount of time. And keep in mind, with some of those growth stocks, they could come down 30, 40, 50%, still be expensive, okay? Okay? Make sure you look again, okay? Number 2 or 3. Be on the lookout for beaten down Rona dogs, okay? These are stocks that essentially have been beaten down by the Rona, okay? And they've been, kicked and no one cares about these stocks and everybody just forgot about them in the corner over there. And a lot of these companies, they have had their businesses devastated because of Roni Rona, okay? But as Roni Rona starts to go to the backdrop in 2021, as we move on, vaccines come out and things kind of transpire, and eventually the Rona will be a thing of the past, okay? And there's a lot of stocks out there that are going to benefit massively from this. And a lot of those stocks are already starting to move. And if you want some examples, I'll give you 3 different examples, okay? So one example is Nordstrom, okay? Look at this stock here today. It's over 11%. This stock is up. We just looked at the market, right? None of the indices are even up 1%, and Nordstrom's up 11.5%. But look at the stock chart on this. In the past 2-3 weeks, this stock has gone from $12 to $23, okay? The stock's almost doubled up in a matter of what, a couple weeks? That's unbelievable. November 6th, you can buy that stock for $12.83. Here today, November 23rd, it's $23.75, okay? When these stocks start moving, they start moving fast. Nordstrom is a perfect example of a stock that has been kicked and kicked and kicked, and Wall Street doesn't care about that stock. They forgot about that stock. And this is a company that was gonna always kind of make it through the Roni Rona. And guess what? They have a big online business that's expanding rapidly. And guess what? You don't need to actually go to a physical store to buy Nordstrom's products, okay? And never mind, as more and more people start to go to physical stores again, and this whole fear of getting the Rona because you go out, as that starts to fade throughout 2021, and especially moving into 2022, Nordstrom's gonna be there to be a great business model again, and likely be a profit machine again. And everybody forgot about Nordstrom, okay? When they start moving fast. Winning Resorts, another perfect example. Obviously, 100% dependent upon travel to Vegas, Macau, and Boston, right? And everybody forgot about this stock, kicked it while it was down. We don't want any piece of that. It's a great business model. Anytime there's things are normal, this is a very profitable business. It's a beautiful business, okay? It does amazing numbers. And everybody forgot about it. And you go back less than a month ago, the stock's 69 bucks. You buy it today, it's 95. Anybody that bought this stock in the past month or two has made an incredible amount of money. That's the best way to put it, incredible amount of money. Same exact thing with Nordstrom. Anybody that's bought that stock within the past couple months has made tremendous amounts of money, okay? Another stock that is a perfect example, Royal Caribbean, okay? RCL, look at the stock. The day before Halloween, the stock's 51 bucks. Today it's 75. I mean, that's the thing with beaten down dog stocks, okay, that everybody forgets about. When they start moving fast, okay? That's the best way to put it, man. And that's why, when I did that Nordstrom video, when the stock was I think that was 2 months ago, right? I did a Nordstrom video, and in that video, I went out there and I said that stock will 2x fast, right? And I did that video a couple months ago. And for me to make a short-term stock price prediction is really me sticking my head out there, because you guys know I hate doing that, right? I like to be the guy that focuses on the long term, the next 3 years, 5 years with a business. For me to go out there on a YouTube video and say that I believe that stock was gonna 2x or more in the next 12 months, I gotta really be confident to say something like that, right? But because I know that's the way these stocks are, man. When they start moving fast. You gotta get your position built, and then you just gotta hold on to the roller coaster, man, okay? Number 3 of 3, value stocks are the ops, okay? Value stocks are the real opportunities in this market. This is not a great market if you are trying to buy super high growth companies at the moment. It's just not, okay? A lot of these companies are either already starting to fall, or they'll likely start to fall over the next couple months, okay? But value stocks are the ops, okay? And by the way, there's a few good growth stocks out there. Don't get me wrong, there's a few of them, okay? But I can tell you, for every one good growth stock, there's probably 9 bad growth stocks right now. Maybe 10% of growth stocks are actually a deal right now and actually make sense to buy. 90% of growth stocks don't make sense to buy right now, okay? So value stocks are the ops, because I would say it's much more of a 50-50 with value stocks, where 50% of them are good buys, 50% of them are okay? It's a good time right now to be 15 to 25% cash, in my opinion. You don't want to be all the way down to 10% cash, because I don't feel like right now is a time where you just want to be flooding money into the market. However, I don't think you really want to be 30% cash right now, because there are some good deals out there. like I said, there's still 10% of growth stocks are probably a good deal, okay? So that leaves you a huge chunk of the market, right? There's a massive amount of value stocks out there that are an interesting deal, right? And then you still have some of these Rona, beaten down dog stocks that are likely interesting valuations, okay? So I feel like it's a time period where you want to be a holder of stocks and you want to be a light buyer of stocks. You don't want to be flooding money into this market, but to buy lightly on some of these interesting value propositions and maybe some of these beaten down dogs, okay, now we're talking, okay? So it's a time where I feel like you're holding or you're lightly buying. You're not heavy buying and you're not selling necessarily, unless it's a stock that's massively overvalued, I feel like 15 to 25% is really good, okay? Now, if you're looking for more specific stocks in the market that are pretty interesting, check out a couple videos I produced here, okay? One is this video that I came out with just a day or two ago, okay? It's called 5 Stocks to Buy Under $10. That goes into some interesting stocks there. It's one of those videos that, if you're even not interested in any of those 5 stocks I mentioned in that video, and that's on financial education too, by the way. It's a great video to check out and give you some starting points to kind of start doing some research, and you start looking at these stocks and you're like, that's not really interesting, but then you start seeing other stocks in that category and then you might find one you're interested in, okay? So that video was put on financial education too, really helpful, okay? A video I put out last week here on the main channel I think is really helpful, called my new top 7 biggest stock market investments. Put that on the main channel, and that's another one of those videos that even if you're not interested in any of those 7 stocks, they're a great starting point so you can continue to do some research in maybe other stocks in that industry, and it makes you think a little bit differently about some other stocks you might be looking for out there, and it gets you on kind of the right track, okay? Hope you guys enjoyed this video. As always, if you don't mind, smash the thumbs up as always. I appreciate each and every one of you in the thumbs up squad. You help out the YouTube channel in a massive way. I appreciate you, okay? Also, make sure you subscribe to the channel. Once again, if you're trying to get in my private stock group, make sure you fill out the application and try to get in there within the next week or two if you're allowed to, essentially, because like I said, like that deal they're doing essentially, where you get a, for anybody that signs up for a 2-year membership, you get a free month of one-on-one coaching and the access to those individuals. That's a pretty epic thing, needless to say. So yeah, make sure you take advantage of that. I'll have that as one of the pinned comments down there, and it's also linked in the description. Thank you for watching and have a great day.